Welcome to our video exploring Mexico, a nation with a burgeoning economic landscape and strategic significance on the global stage. As the 13th largest country and the second biggest economy in Latin America, Mexico is making waves thanks to its close proximity to the world's largest economy, the United States. Sharing a 1,954-mile border with the U.S., Mexico benefits from a robust trade relationship, significantly enhancing its economic prospects. This shared boundary includes 54 official border crossings, spanning 4 time zones, which facilitates a thriving exchange of goods. Although often overshadowed by its northern neighbor, Mexico's economic potential is increasingly recognized. This is particularly evident in the northern states, where GDP per capita reveals higher income and economic output levels compared to the south. Northern Mexico thrives on exports, being well integrated into global supply chains, especially in sectors like manufacturing, electronics, and automotive. Proximity to the U.S. market has allowed these regions to capitalize on opportunities beyond just commodities. Recently, though, there's been a notable shift. Southern states like Oaxaca and Tabasco, traditionally agricultural and reliant on oil, are experiencing growth, driven by nearshoring, a strategy where businesses move operations closer to home for efficiency. Nearshoring has become a pivotal factor in Mexico's economic ascendance, as geopolitical tensions push companies to relocate operations from China to places closer like Mexico. The country witnessed record-breaking foreign direct investment in 2023 due to this trend. Mexico's strategic location and cost-effective labor market make it an appealing alternative to China for U.S. and European businesses looking to reduce dependence on distant suppliers. In 2024, Mexico surpassed China as the U.S.'s leading import source. This transformation isn't just about trade volumes. It represents a significant growth opportunity for Mexico, which saw its economy being one of the fastest growing among the G20 nations in 2023, coupled with unprecedented wage growth. Yet, Mexico's journey is not without its hurdles. Poverty and inequality remain pervasive, with wealth significantly concentrated among a small segment of the population. Despite progress, poverty rates around 33% are still high for a nation on the path to development. The informal economy poses another hurdle, employing over half of Mexico's population. Many of these workers lack access to essential services such as healthcare and pensions, which perpetuates income inequality and limits economic progress. Moreover, crime and corruption, particularly related to drug cartels, continue to impact economic stability. While strides have been made to combat these issues, organized crime still contributes to the resilience of the informal sector. Mexico's informal economy also includes numerous small businesses operating beyond government regulation. The challenge lies in formalizing these entities to integrate them into the official economy, facilitating access to credit and contributing to tax revenues. Historically, Mexico's economic development has been resource-driven. From colonial times through the 20th century, resource extraction, especially silver and minerals, was a major focus. The oil boom further shaped the country's economic narrative. The nationalization of the oil industry in 1938 led to the formation of Pemex, a state-owned oil company. While it has been a substantial revenue source, reliance on oil exports has also made Mexico vulnerable to fluctuating global oil prices. Economic reforms followed the 1982 debt crisis, prompting trade liberalization and diversification. The 1994 signing of NAFTA was a turning point, opening Mexico's economy and enhancing its integration with the U.S. and Canada. Since NAFTA, Mexico's export sector has flourished, doubling exports as a share of GDP by 2021, positioning the country as a competitive player in global trade, with electronics and auto parts being key export components. NAFTA's successor, the USMCA, continues to support Mexico's trade relationship with its northern neighbors. The manufacturing sector has modernized, drawing foreign investment, creating jobs, and formalizing employment. This influx of investment has driven demand for high-skilled jobs, encouraging the Mexican workforce to pursue higher education, enhancing their skills, and contributing to the nation's economic development. However, productivity remains a challenge. Despite trade success, Mexico's real GDP per capita growth has lagged behind peers, largely due to stagnant total factor productivity, underscoring inefficiencies in resource utilization. Education is a key factor in boosting productivity. While Mexico has made strides, it still lags behind OECD countries in educational outcomes, particularly in rural areas, impacting workforce skill levels and economic potential. The financial sector's limitations further hinder growth, with access to credit for small businesses being restricted. Expanding credit access is crucial for fostering innovation, business expansion, and job creation. Looking ahead, Mexico stands on the cusp of greater opportunities, especially with continued nearshoring. However, its dependence on the U.S. for exports presents vulnerabilities, with potential shifts in trade policies looming due to political changes. Demographic shifts also pose challenges. Mexico's labor force growth, a key economic driver, is projected to slow by 2030, necessitating productivity improvements to sustain long-term growth amidst a declining fertility rate. In conclusion, Mexico's economic landscape is rapidly evolving, marked by strategic positioning and dynamic trade relationships. Balancing growth with overcoming poverty, inequality, and structural challenges will be key to unlocking its full potential.